Good morning, everybody, and this is your S&P 500 day trade setups for today. So, not much I can actually add to this picture, but this picture is not very pretty as far as I'm concerned. So, before we get into that, let's just have a look at some of the politics right now. So, or noise as we call it. So we're getting economic data coming through, which is fantastic, So consumer spending is up. Okay, no problem. There's more participants in the stock market than in the dot-bomb crash in the late 1990s. And the Feds basically pump money into this. They've put a whole lot of stimulus into this. They've given everybody stimulus checks, and a lot of that money has come into the stock market, and also increased spending in luxury goods. Something simple is dirt bikes. Dirt motorcycles in the US is at an all-time high at the moment, with people buying them during the lockdown period, buying them for recreation, whatever. But that's what the stimulus checks were created for. They were created to stimulate the economy. So the whole point of that was that a lot of people, some people needed that for food and used it for food. But there's a lot of people that actually were okay, and that check went straight back into the economy, which is now pushing the data and actually pushing the stock market at the moment. And then you had the Feds that are physically buying stocks in the stock market as well. So when they see things just looking a bit shaky, they spend more money. So what has that done? That's artificially blown the stock market's all-time highs. It's artificially blown stocks up. And when you start looking at the fundamentals that investors look at for building a portfolio, most of those blue chip stocks that they would normally look at and buy into are now looking extremely expensive, overvalued, and just not feasible to add to a portfolio. So there's so much going on at the moment, and the Feds have created a monster, and this monster, as everybody's screaming about bubble, 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 bubble. Yes, we're definitely in a bubble, and when bubbles pop, they do get nasty. And the crash that we had last year is small in comparison to some of the targets that I've looked at on the weekly and monthly charts at the moment. But that being said, that the fear is important. Make sure that you keep your stops in place and you're anticipating something like that. But for the meantime, the trend is up. We go with the flow. We trade with the trend. So right now we have 4,200 on the cards, and I think that is going to cap us a little bit before we probably go sideways or start building structure to the downside. But at the moment, this grouping here is not pretty, and it's on the daily, it's on the weekly, and it is also on the monthly. Okay, last time it's grouped on the monthly, look at that, fell off. But it can also group on the monthly for an extended period of time before falling off. So this parabolic move at the moment, if you look at that on any time frame, this is not an area you want to be buying stocks. You definitely don't want to be buying stocks at the moment because of what you see here. Anyway, enough ranting and raving. Let's just get down to the 8 hours. So the first thing that I see is we have a bit of a tweezer top here, two tails here. We did gap down, we've come back to close the gap, which is fantastic. Don't like those gaps open on the weekly. Still in this channel. We were top of the channel, we're now kind of bottom of the channel, so can move straight into the lower time frames. Look at the 3 hour indecision range bar, then a pin bar. Not something that is exciting me for a buy. And then look at my oscillators at the moment pointing to the downside. So not really that keen for this at the moment, but if we come down to the hour, it'll give us a different picture. So first things first, I'm looking to see whether we can find support at 41.75. If we find support there, we will buy, and basically buy to test more than likely that level there. Okay, and I'll tell you now why I'm picking this level, which is 41.87 as my inside tail, but more importantly, it will be a shoulder, a head, and another shoulder. So that's the first thing. So the bears are going to be looking for some kind of pattern that is going to assist them in anticipating that we have a top and start getting in. So that's the first thing that I can see. The second thing is we have sort of diversions Where did we see these diversions again? So ever so slightly here, you can see there's a high to a low, sort of it's pointing to the downside while price is pointing to the upside. It's on the 4-hour chart, and it's between this high and that high. So that is typically looking for as some kind of either sideways consolidation or some kind of break to the downside that we need to anticipate. But for me, this is the level to buy off right now, 41.75. Come back, test this, and give me a pin bar or some structure on this. I'm definitely keen to that. What worries me is this break below it. Okay, so normally when you get a break below it, I'm looking for the next possible area to buy off. And guess where that is? It's all the way down here. So that's 41.52. So that is would still be in the upward trend, but that would be a fairly decent area to buy into. So 41.50 would be a decent area to buy into. But I do believe, if we do sort of find a base here, which is what I'm expecting, then 4200 is on the cards. Once 4200 is done, and obviously we're going to need to get through 41.87 before we get to 4200. Once that is done, then I'm really going to be very, very cautious about what direction we take. But for the moment, we're looking to buy, but we're looking for a decent setup. And at the moment, this is not a decent setup. So I want to see us come and defend this area, 41.75. That's the area we're waiting for. If that gives way, you've got other areas here on the lower time frame that you can look at. And one of them is pretty much, it's a little bit lower. And you can see that's where we've got a pin bar off. And that will be 41.71. So that's kind of the zone. If you look at the hour, you'll see there's my zone. It's basically that whole tail, and that's the area we're looking to buy off. Okay, watch your oscillators are starting to grip the downside, but I want to see another push down and then buy a step in before we move up. Earnings season continues today. I think there's no real tech stocks or anything, but there are some sizable companies this week that'll be releasing the earnings. So the earnings are going to be good. They are typically going to be good. So I think for the rest of the earning month, you're probably going to find us with some pretty solid moves to the upside. Pullbacks will be bought, and it's a buyer's market at the moment. But just be careful. I'm not doom and gloom at the moment, but a healthy pullback is definitely on the cards, and it's probably going to happen in the next week or two. Okay, anyway, that's it for me. Hope it helps, and we'll catch you later. Cheers for now.